Hey, good morning, everyone. Jack McGrath with NakedTrader.com. Well, we've had an interesting morning. The market overnight, this red March contract went up to 99.19. Yesterday, we talked about the resistance area was from 16 to 19. We had that old double high at 17. 18 was also a previous double high, so we went up to 19 last night. Now, we came back down from there this morning and put in a 14.5 low, and the market is grinded right back up to that 19 level. So it's area that you want to keep an eye on, 16 to 19 now, and then 14 below, where yesterday we spent a lot of time at that 14 level and it held in, and the market just trades well bid. Over the last 3 sessions in red March, I mentioned it yesterday, from like 9 o'clock or so, we saw good-sized buyers come in the red March contract. We'll see if that happens this morning, but I would say this 19 level, if we start to take it out in the red March, you're going to look for a trade up towards 99.25. Back below 14, you get some relief down to 9.5. We've had a double low there this week. And then 7.5, 8 underneath that is support. Interesting that crude oil was down this morning, gold down, and now you're seeing a little sell-off in the S&Ps. Now, I wanted to point that out. I did send an S&P chart out this morning, but we are June lead contract this morning, and you are breaking that lower triangle line, and the 50-day moving average came in right around 1294. I think that's an area you want to keep an eye on. And if this S&P stays down towards the lows, you're going to look for closes today below that triangle line, and we'll see. Then you have a good objective. It was 50 handles on the March chart. I think it's around 37 to 40 handles on the June chart. Still, that's a substantial move down. That may keep the Eurodollars a little bit bid. 10-year also interesting. This 119.07 level is the upper end of a triangle also, and we'll be looking for closes above there. We have gone up through there, but I'd like to see the market close above that upper trend line, and then you're looking for a pretty substantial objective, so around 4 points either way. Now, if we start to fail in the 10-year, you could get a trade all the way back down to 118 even, and that'll be the lower end of that triangle line. So it's interesting, a little dangerous here. It feels like you should be short this market, but I'm very hesitant. That's why I'll be watching this 119.07 level in the 10-year note. So we'll see what we get out of that. Have a good day. Jack McGrath with NakedTrader.com. Thank you.